Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 4th of December. All right, just having a quick look at the major currencies. Saw yesterday the Aussie pop higher, Kiwi, dollar yen had drifted lower. That's gone again, okay, on a bit of a risk-off sentiment. Euro popped high yesterday, sort of just trading sideways as it's sort of found fair value. Positive polls for the Conservatives in the UK have seen sterling pop above sort of just briefly above 130, but really through 129 sort of 50 resistance. And dollar CAD continues to trade sideways as we approach the Bank of Canada meeting today. Now, the answers to all these moves here, you can clearly see on the various sort of news channels. As I said, it's a risk-off day. So you're looking at what would cause that, okay? And I've been saying it for some time. Trump has got no interest in sorting out a deal with China, in my opinion, until after the US elections next year. And that's pretty much what he's tweeted or said. So the chance of a China deal, saw that safe haven trade unwind. Now, you know what? They're buying yen, they're buying Swiss, and that's the two big catalysts. And also throw in the mix there, one of the other core drivers, the Trump impeachment. They're now sort of, throwing barbs, Trump is obstructing the whole thing. He's got no interest in being impeached. So that's going to really throw things up. So you've got dollar CAD, right? Sort of caught between domestic data, central bank, and then you've got this China sort of trade deal issues. And then obviously sterling popping to the top side on positive election results or polls. So that's what we've got. This is, the whole move. We had no data yesterday. No economic data in the European or North American sessions to really kick things off. But what we are seeing with that risk-off sentiment, we are starting to see some stronger moves here, particularly dollar yen and dollar Swiss. As I said, the risk trade is back on the cards, and that's a pretty strong sentiment across those two pairs. The dollar index is about to go through multiple timeframes on the trend, so that'll pick up speed as well. On the downside, sterling and Kiwi, the two real pairs that have really kicked it in above a couple of time frames on the resistance levels. Aussie's not far from going through a level. And this is where we got to focus because you can see the build up. You can see what's happening. The dollar's drifting lower. The other pairs are moving higher. So you've got Aussie, which is about to break a daily trend line. Well, this is really good timing for us because we've got the Aussie GDP figures out. We get strong numbers here. It's going to be a pretty easy opportunity to be looking to get long through 68.76 in my eyes. Okay, we're going to need a little bit of variance on the top side, but that's not a bad play. The only other thing you've got to keep in mind is when you are looking at the overall sentiment here, right? You've got so we've got normal liquidity, of course, but the risk-off sentiment coming from these events. Now, these are geopolitical events. They can happen at any time. So these current moves, and this is what we've been dealing with for some time, the moves on a lot of these currency pairs is driven by these, which is pretty weak. It's a pretty weak sentiment. The sentiment from the central banks is very strong and holds strong for weeks. This sentiment can change in a heartbeat, especially when Trump starts to pull up his Twitter account, right? So the dollar is moving lower because of all these events sort of colliding, but that can turn around very quickly. But you know what? What we've got right now, we'll work with. Okay, the Aussie about to pop. The dollar is moving lower against the dollar pairs, and the other pairs are moving higher. So let's run with it, right? There's no real clear momentum, right, coming at this point, and that's why we're looking for the data to give us a bit of a boost. So Aussie sitting above, up in no man's land, same as Kiwi. Euro's up there as well, and now you've got sterling doing the same thing. That's a good sign that these pairs are correlating, but don't forget there are other weird events going on, obviously the geopolitical stuff. So to me, we're looking for the next driver. To me, it looks like the GDP. So I'll be looking at the Aussie crosses in particular for trading opportunities today. And then as you come through the North American session, okay, we've got the first part of the data coming out, the ADP non-farm employment change. And this is a bit of different data. Don't think this is the non-farm payrolls. It isn't. To me, one of the key data releases to watch in the North American session for the US dollar will obviously be the ISM non-manufacturing numbers, right? The manufacturing numbers we had on Monday were weak. You want these ones to to match those, we get more dollar weakness. These other currencies will continue to run further. So keep a very close eye on that. And then, of course, one of the premier events, the Bank of Canada interest rate decision. Now, there's no change of rates expected at all, but so the focus will be on the statement. I can't see the Bank of Canada coming out doing something different to what Polos, the Bank of Canada governor, said a week or so ago. Basically, it's a bit of a wait and see situation. There's so many different things pulling the CAD. You've got the US data, the Canadian domestic data, the China, US-China trade deal, oil prices. It's being pulled and pushed all over the place. So for me, the real highlight outside of that, because I don't expect much out of the Bank of Canada, is this ISM non-manufacturing number. That's going to be a key focus. Of course, in that North American session, keep an eye on Trump. If he does come out with some more weird comments, that could either turn that risk off sentiment on further or have a bit more risk on. And in the Asian session, Aussie GDP is your real go. All right, guys, that's it from me. The charts, the currencies are moving, which is good. We just got to get some things lining up for us, and that's the data. All right, guys, have a good trade day. Cheerio.